All right, ladies and gentlemen, so we're going to talk about trend following and specifically how to do trend following with our 10 EMA strategy. If you're wondering what in the world is a 10 EMA strategy, stay tuned. We're going to jump into it. But first, this presentation is for educational purposes only and does not constitute financial advice. Trading involves risk and significant risk and is not suitable for all investors. The decisions you make and the actions you take in trading are solely your responsibility. Past performance is not indicative of future results. Understand and acknowledge these risks before participating. All right, so we're going to go ahead and get started. So who am I and why am I teaching? So my name is Matt DeLong, and I've been a stock and options and futures trader for 10 years. I've been working with trading automation for the past 8, and I was the former CTO, Chief Technology Officer for real life trading. So what we're going to do is, oh, and I was a speaker at the Money, or I am a speaker at the Money Show for the last 5 years. If you're going to be in Dallas in May, reach out and we'll connect. So, going to be in Dallas here in a couple weeks. Okay, so let's go ahead and get started. Just jump into the strategy, Matt. Tell me all the things that I need to know. So, first, if you guys have ever seen a moving average, there is something called an EMA. EMA stands for exponential moving average. And a 10 EMA refers to a 10 period, basically going back 10 candles. So if we're looking at a chart, 10 candles, 10 EMA. Okay. And we're going to fly through this real quick and we'll get into some examples. But here is how the mechanics of this work. Number one, is this strategy does go bullish and bearish. So we're going to kind of talk through this and I'll show you an example here in just a sec. Okay. You need to see how this works. We're going to go through that. So the first thing is basically you guys have seen on a chart, you might have like an exponential moving average, something that looks like this, and you'll have some candles that kind of look like candlesticks or something that looks like this. And the line here is your 10 exponential moving average. Okay. So what this is saying is I need a bearish candle or a red candle to close above. Now, if you guys have ever seen the anatomy of a candlestick looks pretty much like this. And if this, actually, let me draw it a little different. Let's do it a little different. Let's try again. All right, so let's say that this is a bearish candle, a red candle, or a black candle. I prefer black and white candles myself, but let's say it is a red candle. If you like purple, then it's purple. And in this case, we want in order to go long, we want a red candle closing below, I'm sorry, closing above the 10 EMA. So our 10 EMA looks like this, and we're looking for a red or a bearish candle closing below the low. Now, if you're a student of the candlesticks, you know that that upper wick represents the high, the lower wick represents the low, and our candlestick is going to be moving downwards. So this represents our open, and this is our close. So open here, close here, low here, and our high is up here. So again, in this case, what we're looking for is we're looking for a red or a black or a bearish candle closing above, right? In this case, we're just closing above. Now, a couple other examples obviously could be something like this, right? Still closing the very lower part of that candlestick. The body is where we're closing, and we want to close again above. So we're closing above that 10 EMA line. Okay. So the next thing, the other way around, and don't worry, I got some examples. Hang in there. I'll show you in just a sec. The other example is pretty much the same thing in reverse, where we want a bullish candle closing closing below the 10 EMA. So if you're a student of the candlesticks, you'll know that this again is the high, this is the low, and the time frame doesn't matter just yet. We'll talk about that here in a second. So again, our open is down here and our close is here. Okay. So open and close. So basically what happens is whether we're trending up or trending down, we're looking for the opposite candle. And what we're going to essentially do is we're going to place some trades based on what happens next. And essentially what we want to do is we want price action to close up here, but we only want to get short and go short when it breaks below the low. Okay. You guys ready to jump into some real examples? So let's take a look at our example number one. So this is a short example, short meaning bearish, bearish meaning you're going to sell to open, you're going to wait for a lower move. Okay. Now this is a actual real trade that was taken. You'll see right here is this golden tan line represents our 10 EMA. Remember, it is a 10 period. And at this point, it doesn't matter. We're talking about 10 minutes, 5-minute chart, 15-minute chart. We'll get into that in a minute. But in this case, it is closing this white candle right here green candle is closing below the low. You guys see that? Now the catch is we want the upper wick to touch the 10 EMA, right? So for example, right here, this candle almost fits the criteria, except it doesn't quite touch, correct? Doesn't quite touch. And we have some kind of time limits on when this is running. This is not running all day, every day. It's running on certain times of the day. Now, what about this candle right here? Does this meet our criteria? This candle right here closes above, but we actually want a green bullish candle closing below, right? So again, this one meets our criteria. This closes, it's a green bullish candle closing below the low. But why does that not meet our criteria? Remember, the third piece here is upper wick touching or interacting with that 10 moving average. Does this make sense? Yep. And the 10 EMA again is basically a 10 exponential. I'm not going to type all that out, but 10 exponential moving average. That's what the 10 EMA is basically. So when you add an indicator, you're basically saying what kind of indicator. There are different kinds of moving averages. There's like a SMA. I think there's a VMA. There's all kinds of MAs, but exponential moving average is what we're talking about here, 10 EMA. And the difference is the more, it's basically more weighted towards the most recent events, most recent candles, right? So most things like a simple moving average is like a flat average, right? So pretty much flat average, that would be an SMA. And EMA gives more weight towards recent candles. That's the difference. Okay, so here we have this candle right here, which obviously does not interact with. Our next live candidate is right here, where we have a candle. It is a bullish candle, right? And it is interacting with and touching, crossing or touching that 10 EMA. Can you guys see that? Now you're like, Matt, what is that red dot? The red dot actually represents what we call the signal candle. The signal candle is basically, this is the thing where, like, ladies and gentlemen, the moment you've all been waiting for, that's what that red dot is. It's the moment we've been waiting for, right? It meets all three of our criteria. It's a bullish candle. It's closing below the low, or below that 10 EMA rather. And then what we're going to do is we're going to get short right after, right? So essentially what happens is we have the red dot that is automatically put on our charts. We have technology that does this for us. And then we're using that bullish candle here where that red dot is our signal candle. So what does that mean? It means we're going to get short when we break below the low, and we're going to put a stop up here. Now, I don't know if you guys can see it, but we have a red line right here that represents our stop loss. We have a kind of a teal line, that's our entry. And then all the way down here is our green line, which is our take profit. Okay. So the idea is we already know a direction. If we have a bullish candle closing below the low, we automatically know we're going to be getting short. If it breaks below the low, we're going to be getting in. We're going to get into a trade. Okay. And I got some more examples here in just a second. So again, if the breaks below, what does break below mean? Does anyone know? What does that mean when I say it breaks below? It means the next candle goes below the low of that candle, right? So again, that's why this candle is like a signal candle, or it acts kind of like a template, right? We're using this candle as our template. And all we're doing is let's just pretend that this represents a $3 move. We're going to put our stop is $3 above the high with a little bit of padding, right? So maybe we have a $3.50 stop, okay? And so that's all measured kind of it's pretty automatic. And then what we're going to do is we're going to look for 2, 3 times our risk, which means if we're risking $100, if we win, we're gonna make 3x of our 100. So we're always risking a fixed amount. Okay, so in this case, if I risk $100 and it loses, I lose $100. So I'm risking 100, but when I win, I'm gonna make 3x of whatever that is, and that is $300. So I'm gonna lose 100 if it doesn't work. I'm going to make 300 if it does, right? So again, our spacing here, you'll see 1, 2, and 3, not quite exactly, but basically we're risking, we refer to this fixed risk as an R. An R is a risk unit. How much can your R be? It can be whatever amount you want, but when you trade and you lose on a trade, it should feel like a paper cut. It should not sting deeply and cause you to lose sleep. If so, your size is too big, right? So again, we're talking about trading trend strategy or trend following in the context of funded accounts. So here's what happens. Like this is the way that this works is our signal candle gets in, an order is thrown out, and we like to use a stop limit order. Have you guys ever used stop limit orders? And a stop limit order is going to basically say if and only if price action moves lower, then we're going to get into the order. We're going to get into the trade. Okay. Once we're in the trade, once we're in, then we're going to go ahead and put our stop loss up here. Our red line is our stop loss, and our green line is our take profit. Again, this spacing, as you can see, is about 3 times. So think of this as like a half mile, right? Or let's say 1 mile, and our profit is 3 miles away. So if it moves against us, we're going to give it a little bit of room to move against us, but we want to go a long ways to hit our profit. So risking $1 or $100 to make $300. Okay. Now, even with 50-50 odds, ladies and gentlemen, losing $100 to make plus 300, I will take that. Even with 50-50 odds, most of you who know probabilities, you guys should be able to take that trade all day, every day, right? Even with 50-50 odds. Now, before you say, hey, what is the win rate? I can automatically see that question coming. Most people fall in love with win rates. Do you guys want to have high win rate or do you want to make money? Which one? Like pick one. Because even with 50-50 odds, you can still even with like a low win rate, you can make a lot of money. Okay. But it's all about how you manage your risk. Okay. You guys want to see another example? Let's take a look at the opposite. Let's take a look at the long example. Again, this is all automatically calculated in size. Here is our red candle, our bearish candle. You guys see how it's closing above the tan line, okay? Now, I want to see how carefully and closely you guys have been paying attention. So I'm going to put some letters on here. There's an A, there is a B, and up here is a C. Where on this candle at A, B, or C, which letter did price action for this candle right here? A, B, or C, where did price action close? A, B, or C? I want to hear from you guys. Where did it close? Did it close at the A, the B, or the C line? Oh, getting some mixed answers. Yep. So the answer is A. It closed right here. Now remember, why did it close right there? Remember let me switch colors. With a bearish candle, we're going to open here and close here, right? It's the exact opposite for a bullish candle, right? Bullish candle, we're gonna open here and we're gonna close here. Okay. Now why? Well, remember a bullish candle. I always think of like bull in a china shop. That's like bad. Bull, I'm sorry, bear in a china shop is bad. Bull in a china shop is kind of fun. So like running with the bulls. So you think about bearish means it's void. It's I don't want to say naked, but it's it's bare. It's barren. So again, it goes down. So opens here, closes here. The bullish candle are the opposite. Okay. Now things like the high and the low are going to be the same regardless of what color candle, right? Your high is going to be your high, your low is going to be low, but in the opposite direction, your open and close are going to be reversed. Does that make sense? Okay. So a couple of you, most of you got that right. The answer, of course, being A. Most of you guys got that right. Now, in this case, remember, there's three things we want. A bearish candle. Is this a bearish candle? Yes or no? The answer is yes, it is. It's a bearish candle. Is it closing above my tan line? The answer is yes, it is. So far, so good. Bearish candle closing above, right? And the third piece is our lower wick interacting with or touching that 10 EMA. That lower line is it interacting with. And the difference, in case you were wondering, is imagine a candle like this and my moving average is right there. That meets all my criteria. It meets criteria number one. Number one is right here. Closing above is number two, but it does not meet number three. Number three, meaning my lower wick. So the lower wick has to interact with or touch that moving average. Does that make sense? So the way that we play this is pretty much the same as before. You're looking for a bearish candle to go bullish. I know it's the opposite. You're like, what? Like mind blown. But we want a bearish candle to play a long trade. Okay. It's kind of the opposite of maybe what you guys would think. Bullish means higher, bearish means lower, but we're looking for a interaction with that moving average. So essentially the move we're looking for is something like this. Boom, right? We're looking for that type of a move. We don't want something like that because you guys know what happens at the top. It's gonna turn around and then continue higher. And that's what we're looking for, right? And so in this case, our blue dot here represents what? Do you guys remember what the blue dot in our last one? It was a red dot. That represents our signal candle. We're going to use that candle right there as our signal candle. And the way that we play it is we basically use a stop limit order, meaning if price action goes above our teal line is our entry, our red line is our stop loss, and then all the way up here, miles away, it seems like, is our take profit. Now, what you guys might notice is the very next candle right here triggers us into the trade, right? So again, we stop, the price action closes right there. And then once price action pushes higher, we get in right there, right? So imagine price action is right here, and we're saying we only want to get in at a like a let's go back. We only want to get in with a stop limit order. In this case, it would be stop limit buy, right? So price action is here. We're only getting up here. And the reason, the beauty of that is what? Well, we only want to get in here. What if, and it closes here, if it falls off the map, ladies and gentlemen, do we get into the trade? The answer is yes or no. The answer is no, we do not. We do not get into the trade. That is the beauty of the stop limit. Think of it like a condition. It's like if this happens, if price action turns around and goes higher, then and only then am I going to be in the trade. And that's a lot of retail traders do not know about that. Okay. So all of you on this webinar, all of you get this little inside information. Okay. Stop limit. And in this case, we're going to use a stop limit buy, which means if and only if price action kind of crosses that teal line, if and only if it crosses that line, are we going to be in the trade? Okay. The very next one triggers, and then you'll see we go back to break even, then we're profitable, then we're losing a little, then we're profitable. And how many of you guys would have freaked out right here when price action just like falls below and then reverses really quick? How many of you would be honest? Those of you who can read the candlesticks, how many of you guys would have had a little bit of a nervous moment? We'll call this candlestick D. How many of you guys would have been nervous? Right here's your break even. That's where you got in. You see you're up nicely right up here and all the way back. And that's a violent move, ladies and gentlemen. In this exact example, we're looking at a 1 minute chart. Okay. That's a pretty violent move for a 1 minute chart. Okay. So what does that mean? That means, that means price action started here. It went lower and then immediately pushed higher. That's basically what that means. That's what the candlestick's telling us. Remember, we start here and we close up here at the the top of the body. Okay. So again, goes lower, reverses, and goes higher. Now it actually pushes just a little bit more and then recedes, and that's kind of what gives you the wick, the upper wick or the lower wick. Those basically just mean that's where price action was. That's where it moved, right? It's like the tire tracks. That's where it went. Doesn't mean it started and stopped there. It just means it went there. It went over that direction. So you'll see another example of that right here. Price action went here. It went a little bit lower, shot all the way back up, and then kind of pulled back and closed right there. So that's really the power of candlesticks versus just, you guys have probably seen line charts like Yahoo Finance. A line chart doesn't really tell you a lot. It tells you where it closed, right? I want to know the open. Well, I don't know about you guys, but at least I want to see the open, the low, the high, and the close. I want to see all of those. I don't just want to see the close only. I want to see every single one of those because that gives me some ideas, right? This gives me some idea that price action tried to go lower and the bulls pushed it higher, and you can see quite a bit higher, right? So in this case, again, we set up. Yeah, some of you guys are. Oh, we got a couple honest people, Henry, Henry and Abina. We got a couple honest people, right? You guys would have been out of the trade, and probably the heart would have definitely been racing. The palms would have been sweaty, like all the things, right? With this candle, with this sharp, abrupt move, and then a kind of a push higher, right? It would have happened very, very quickly. Again, because this is a 1 minute chart, it would have had to start and stop inside of a 1 minute candle. Okay. So again, we broke above, meaning what? It means our next candle we broke above. And then our stop was placed. Once we're in a trade, we're going to go ahead and put up an order like this, where this is our take profit. And this is going to be our stop loss. Now, why do you think it's necessary to trade with a stop loss? Do any of you guys know? Remember, we're talking about the context of using funded accounts. Why does that matter? Why do we need a stop loss? Why don't we just like buy as it goes lower, buy more and more and more? Why does that matter? Anyone have any ideas? Why does it matter? Why do you need a stop loss? Anybody? David with the right. So in the context of funded accounts, you have a fixed amount of dollars you're allowed to lose, right? And most funded account programs call it your drawdown. Now, drawdown is a pesky thing that is a reality like gravity that you have to accept. It's not optional, and all funded accounts have drawdown rules. And in order to abide by those, we preach and we basically highly recommend fixed risk per trade. Okay, what does that mean? Well, we'll look at it in a slide or two, but what that means is that we are going to lose a set amount, like $100 if we're wrong, right? And if we win, we want to win a multiple of that, not just you don't want to risk 100 to make 100. You want to risk 100 to make 200 or 300, right? And in this case, we call this 3x or 3 times or 3R, right? We're risking 100 to make 300, which is why the spacing between here and here, if you look at it, is probably right at 3x. You guys see that? The spacing between where I get in and where my stop loss is I can move that at roughly 3 times. So I can look just at this chart and determine my target is roughly a 3R target. Okay. So that means if I get in here and it crosses my red line, I'm going to be down 1R. So what is an R? Well, if I'm risking $100, my R is $100, meaning I'm going to lose $100 if I get into the trade and it moves against me. However, if I'm making 3R, my profit taker, my take profit, I'm going to risk 100 to make a positive 300. Okay. Now, again, every single fund account program has rules for goals to pass your challenge. And we'll talk more about that here in a second. But at the end of the day, I want you guys to be comfortable and understand these numbers. Okay. Now let's run another scenario and see how well you guys are keeping up. Okay. If I risk $250, okay, and I'm wrong on my trade, I'm going to lose $250. If I'm right on my trade, how much would I win? How much would I win if I'm risking 250 to make 3R? Does anyone know? Mm-mm. Let's see. Yes, $750. So it's basically 3x of my 250. So 250 times 3. Okay. Now, before you say, Matt, why wouldn't I always just want to make 3R, or why not 10R? Or you can set whatever you want. However, as you can imagine, the bigger the move, those are less likely, right? So like a 3R move is probably more likely to occur than a 10R move. Or said a different way, the distance that we're traveling, most of you might be able to run 3 miles, but maybe not 10 miles, right? You guys see the difference is the distance. You have to go significantly farther. And then what happens if you just come up just a little bit short? You're still in the trade and you don't exit. Now, the reason we have fixed risk is we also have predefined take profits. And in this case, we would basically say, I want to risk $100 and I want to make my take profit is 3x or 3R. Okay. So, as you guys can see, this isn't a hard strategy. It does take some practice, but let's shift gears just a sec and I'll show you an example or two of how this plays out in actual like on a chart. You guys want to see that like actually like automate this? Let me show you. You guys probably want to see it. I don't know. Do you guys want to see it? I don't want to waste anyone's time if you guys don't want to see it. Type a one in the chat pane if you want to see it. I'll play this out for you guys. Let me know if you want to see this. Mm. So David, I guess it's just you and me. We're only one person, you and I. All right, everyone else, look away. Okay. So what I'm gonna do is I'm gonna play this out for you guys. So I'm jumped into NinjaTrader. This is our software, and you'll see I'm using this on a 1 minute chart. Okay. Now, this was an actual trade that was placed literally just a few weeks ago, and I want to show you how this works, and I want to show you like how this can play out, and you guys can get a feel for how this could work. Okay, so I'm going to go ahead and hit play, and what you'll notice in a sec is our candlestick is now moving and live. Do you guys see that? So this is the feature built into NinjaTrader. We have trading technology that actually takes the trade for you. You'll see that is the 10 EMA right there. Boom. And what did you guys see? You see our order got thrown out right now. We have a sell limit order. Gonna wait to get triggered in. Okay. Now, what you might have noticed is our green candle, our signal candle is right there. That is what we're playing. And the price action moved really quickly below. So we have to try to get filled and wait for a little bit of a rollover like this. So we'll give this a sec. You guys can watch how the technology, how the trade actually plays out. It'll push higher and then we'll be in the trade. There we go. Boom. So now remember, if you wonder which direction we want to go, always want to go away from the red towards the green, right? So we're looking for a rollover like this in order to make our $300. Now, here's the cool part is you guys can see a live running P&L. We're down $7 at this point. Remember, we're risking, I think in this case, I defined $50. So we're risking $50 to make 150. That could be any number. It could be 500. It could be any number, right? And I know the coloring's a little bit light, but it's up $50. There we go. You guys think this is going to hit the price target? Yes or no? Is it going to hit the price target? David, what do you think? We'll see. Couple yeses. So here's what normally happens is you're going to be inches in goal. That's a football reference. You're almost at the you're almost there and it's going to start going away. And then it's going to almost come up and it's going to go away. And then it's going to do something like this. It's always so as you guys probably know, in trading, it's really not the strategy, it's the emotions that get most people. Yeah. Yeah. So we'll see. We'll see what happens. You guys can see it's up positive right here. And then as soon as it gets into the trade, you'll see that we have two orders, one for the stop market to exit for the take profit and one at the stop loss. So two different orders in place. And in this case, I'm using part of our portfolio tools, which is bot number 254. That's kind of the strategy I'm using right now. And that is our 10 EMA strategy playing out. So you guys can see it working. Yep. I'll speed this up just a little bit. Here we go. Are we going to hit our take profit or are we going to lose? David, you feeling nervous? Here we go. Oh, nope. Inches and goal, literally, right? And all it has to do is cross that green line. There we go, ladies and gentlemen. Boom, we're in, we're out. You guys see how that worked? And so again, this is the strategy. This is the like the 10 EMA strategy. And you'll see, oops, in our account here, maybe you guys can see that, but it says $150. It's kind of a light number. So in this case, I had it set for $50 to make 3R, which is $150. That is just a minimum amount that I had set for our demonstration here. Does that make sense? Does anyone have any questions about the strategy itself? In this case, you guys can see it actually had two winning trades right there. Just on that. Yeah. And so we're replaying kind of what happened just literally a couple weeks ago. Any questions on that, on the strategy itself? Ask if the entry must be the next candle. Okay. Yeah. Great question. So let's go back into that real quick. Okay, does it have to be the next? No, it does not have to be the next candle. But in our example, it just typically happens to be the next candle. It doesn't have to, but in our examples, it is. So in this case, for the long, we just want anything crossing above here. And typically, our technology will say, okay, if it doesn't fill in maybe three candles, we're going to exit or not exit, but like cancel our order. Yeah. So that's the idea is obviously if it just for this candle, if it just rockets lower, we're not getting in. If it goes sideways, we're not getting in. If and only if it goes higher, are we going to get in? Yeah, so three candles max, right? So basically, and there's a couple extra rules that that are like ideal. So for example, you'll see that this candle right here kind of would have been criteria. Why isn't this candle trigger? Well, because we're already in another trade, right? So this would have been a good candle, and we're waiting for a break to go higher, and it went lower. So then we would exit kind of like the candle pattern, the setup failed after that second candle, right? So it doesn't have to be the next candle, but usually if it's not the next three, the open order, we will auto close the open order, basically, right? Yep. Okay. Questions about the strategy itself? And do I keep the EMA at 10 for both? What do you mean for both? I'm not sure what it means. Both what? Um, so in this case, the strategy uses the 10 EMA. You were asking about SMA. So SMA is like a basic average. We're not using SMA, we're using the 10 EMA. The EMA stands for exponential moving average. Yep. Yeah. And you can modify it as, yeah. So we like to teach like the vanilla ice cream. You can put whatever toppings or twists on it you want. I highly recommend you thoroughly test any kind of variations before you throw variations in it. Yeah. Okay. Let's see. Both in as top and bottom. I'm not sure what that means. Yeah. Do you ever move your original stop loss? Actually, you can. So typically there's like a trailing stop loss that would be like that you can optionally set. That is a little bit more advanced. This is just the base strategy. But yeah, you can have a trailing stop loss. There's a bunch of different ways to do that. But yeah, we and so I'm not sure who iPhone is, but whoever is the iPhone in here, um, you can use the SMA. This strategy does not call for the SMA. The strategy calls for the 10 EMA. Yep. So notice the third candle in the second exam closed below the 10 EMA. Is that why I also do not trigger a blue dot? The third red candle. Are you talking about this one right here? Like you're counting this way, one, two, and three. Is that what you're asking about? So this one, is that what you're thinking? Yeah, Abina, I'm not sure if that's what you're asking about. But uh the third red candle in the second exam closed below the EMA. No, the next set of red candles from the arrow. Oh, yeah. So this one doesn't quite touch so that one wouldn't qualify, but this one would have qualified. But remember, we're breaking above and we need three candles or we're going to cancel. So the reason that this one didn't trigger is because we're still in a trade. Basically, what that means is, hey, we're already in a trade. If another setup comes along and we're already in a trade, ignore the next setup because we don't want to have two trades on at once, right? We just want one at a time. And so this candle right here would have qualified. Yeah, remember we're gonna open the trade and typically three, sometimes five candles. If it and this one would have triggered and it would have worked as well. Yeah. Assuming it canceled after, five candles or something. Yep. Let's see. Time frame, what is the best for the 10 EMA? So the answer to that is what is the best time frame? We were looking at a 1 minute we were just looking at a 1 minute chart on MNQ. That's what we were looking at in my example. Now, before I will tell you this, ladies and gentlemen, don't just jump into a 1 minute on M&Q because there's certain days of the week that I could tell you works better on. There's certain times of day that it works better. How do I know all that? Well, because we have technology that tells us all those answers. It's like the shortcut, the cliff notes, right? So at the end of the day, really, as you guys can see, that the strategy isn't hard. It's being patient. It's being disciplined. That's really the hard part of this strategy or of trading, right? So for those of you who are familiar with funded accounts, the trailing drawdown rules, they punish inconsistency, not bad strategies. Okay. So what does that mean? Well, we personally like funded accounts because it allows beginner traders to make cheap mistakes. Okay. We'll look at an example here. So for example, let's say I'm using Lucid Trading. Have you guys ever heard of Lucid? What are some other funded accounts um, that you guys are familiar with? Besides Lucid? Any other funded accounts? Go ahead and type in there. Henry, it does not work on any pair. Pair typically, I think you're referring to like Forex. We haven't tried trading this on Forex, but we trade mostly futures. Yeah. So, so Apex. Yep. Okay. Yep. So Lucid, Apex, all those, Top Step. Anyone heard of Top Step? So what happens is every single company has a account size. They have a bunch of account sizes, usually anywhere from 25K all the way up to maybe 150K, right? So $150,000 account. Lucid allows you to have up to 5 accounts. So you're gonna have 5 accounts, okay? Anywhere from 25 to 150K. Now, every account size comes with some rules, and these rules are what most people trip over and struggle with. Have you guys have really, really struggled to get an account funded before? Anyone? Yeah, and there's Top Step. Has anyone struggled to get an account funded? The way that this works is you have to grow the account in this is a real example. You have to grow a $50,000 account, $3,000 without losing 2,000. Okay. So basically you have to go from 50K up to 53 without going down to 48K. Okay. So again, that's like -2. And you got to go to +3. So it's pretty simple, right? It's actually harder than you would think because there are some other gotchas, one of which is your daily loss limit. How much are you allowed to lose in a single day? If you violate any of these rules on your way to getting a $3,000 profit target, you have to pay for another account and start all over, right? So the way that we think about this is obviously if you're risking $250 and you make 2R, you're basically making $500, right? You're risking 250, so you lose 250 when you lose, and you make 2R or 500 when you win, right? So you're going to minus 250 in a loss and plus 500. Now, how many 500s do you need to hit your $6,000 profit target? And the answer is 6. It doesn't take a lot. But again, what is the challenge with all this, ladies and gentlemen? Well, the challenge is people are very, very emotional, right? So there's that emotional challenge that people have is where you're going to hesitate, you're going to click on leg. Maybe you put an order in way too late. Maybe you double your size. Anyone ever done that after losing? Or you do the terrible, most of the time fatal mistake of canceling a stop loss because you feel like it's the only way to stay in the game. Okay. And so ultimately, at the end of the day, what we prefer is a totally different approach. Okay. What we prefer is the systematic trading, right? So, what I've taught you so far in the last 10, 20 minutes is I've taught how to execute rules exactly. What is the mechanics of the strategy? And most people gravitate towards our style of teaching if you're more like engineering minded, right, David? So like the engineering, logical, systematic, rule-based trader works great for our type of trader, right? If you're emotional and you have gut feelings, all that, it's really, really tough to trade because you're going to be all over the place. It doesn't mean you can't do it, but it just means you're going to be all over the place. Okay. It's going to be harder, right? Just like some people are more musically inclined or engineering minded, some people left brain, right brain. I have a daughter who is more of the artistic, and I have another one who's very logical. They grew up in the same house, but they couldn't be more opposites on almost everything. Okay. Just how it is. Again, there's not a right or wrong, but there are just different ways to think about it. Okay. So in this case, what we do is we execute the rules exactly, same time, every time, and stops go exactly where they're calculated, where they're planned. And you guys saw that in our live example. It doesn't really care what happened the day before. Doesn't care about, maybe a argument with the significant other. Again, no emotions involved. Okay. So what we built is we actually have some pre-built trading algorithms, one of which we've talked about today was the 10 EMA. And if this is your first time joining one of our webinars, This is actually a series of 6 that we're doing where we were teaching the opening range breakout, we were teaching the snapback strategy, we were teaching the volume bot, and last 2 weeks ago we taught the NR7. Today is a 10 EMA, and then in 2 weeks we're also teaching a scalping strategy. Okay, so these are the base strategies, and we have some variations. The base strategies that our technology executes. And essentially, our approach to trading is the systematic, rule-based, and as you guys know, there's lots of trading bots out there. You can probably buy one for $5 somewhere. Have someone on Fiverr build one for you. However, we take a totally different approach. We actually have a portfolio of trading bots. Okay, so think of it like instead of one strategy that works in only a specific time frame, think about a handful of strategies that turn on and off at different time frames. That's a significant advantage, right? Because you're diversifying. Why does it matter? Well, you guys know that the markets move in different phases, right? Trending markets are always like going up or going down, right? But then there's also like range bound markets. What does that mean? Well, sideways markets where things are going like this, just sideways. And each of these strategies, each of these markets require a different strategy. Just like you can't wear the same outfit in all weather conditions, right? Whether it's hot, you're wearing short sleeves. If it's cold, you're wearing layers and layers of clothes. There's no one size fits all strategy. It just doesn't exist. Okay. So the idea is that we have different strategies that run in different market conditions. The other two scenarios that factor in is high and low volatility. What does volatility mean? Well, it's kind of like an excitement factor. If you've ever been to like a live football game, basketball game, basically like any kind of live sports, when the crowd is roaring, that excitement level, that's volatility, right? It's like the excitement level. And you can definitely see it on the charts when you have like small candles followed by, just like a huge candle. Like you guys have probably seen that before. We actually looked at that on one of our previous examples where we had a candle that looks like this and then it had like a huge lower wick, right? That is volatility. And again, there's no strategy that works in all types of environments. There's not a one size fits all. So what does that mean? Well, multiple strategies, and it helps you not rely on a single strategy. And what it does is it kind of helps smooth out your performance, right? And so that works with just different market environments and kind of adapting to the different conditions. Yeah. Okay, so let's talk about the future of this strategy, specifically the 10 EMA. So we've actually taken the 10 EMA and built it out and automated it. What you guys saw was a little preview of it just a few minutes ago when we were doing the tick by tick. And we actually have technology now that can let you scale from anywhere from 1 to 20 accounts. Apex is the only one I'm aware of that allows you to scale to 20 accounts. Most offer 5 or 10. I don't remember all the companies what all they offer, but you can scale. So the other thing that's super important, again, when it comes to when it comes to trading, and especially funded accounts, you need two things. One is the defined risk because you have daily drawdowns. And the other thing you need is you have to be flat by the end of the day, right? So we actually have all types of things that will go to cash by the end of the day automatically, whether you're in front of the computer or not, whether you forgot to close your trade or not. Okay. And then we also have we have performance tracking where we can show you how well your collection of bots, your portfolio is performing relative to previous timeframes. So really what we offer is like this rule-based trading where most of you have already acknowledged the pain of the emotional decision making. And sometimes, having emotions is pretty human. It's pretty normal. Where most of us get into trouble, and speaking from experience, when we allow our emotions to make our decisions for us, that's usually when we get into trouble. It's okay to be afraid. It's okay. Like those are just normal emotions. When we outsource our decisions to that emotion, that's where we end up in the ditch. That's where we end up blowing up our accounts. And that's where we're almost close to getting an account funded and we blow it all up on one bad trade or one bad day because we got emotional, right? We wanted to hurry it up and we sabotaged it and we have to start all over. And the important thing is why all of this matters. Why does any of this matter? Well, it really changes everything when you can take yourself out of the process, right? It changes everything when you're not emotional and you let the technology do the work. And all you do is turn on the technology. That's pretty simple, right? So most traders don't struggle because they lack knowledge. They struggle because they don't follow structure. They react, they second guess. And sometimes, guess what? They override their own strategy. How many of you guys have ever changed your strategy after a losing streak? Now imagine like an NFL, pro football team. Every time they lose, they have to rethink all their plays and like go back to the drawing board. You would, at some point, you would realize that that's not a pretty good strategy. But yet, most traders actually do that. They think, how can I never lose ever again? And they're going to constantly retool their trading strategy. I recently talked to a lady and I said, what is the longest you've ever used one strategy? And she literally said, 2 weeks, Matt. I've never used a strategy more than 2 weeks. And I said, what is your criteria? She's like, if it starts losing, I bail and look for something else. So my question was, how long have you been looking for a winning strategy? And she said, 6 years. I'm like, wow. So every 2 weeks for the last 6 years, right? You guys can see that that's how emotions kind of take over, right? And emotions can kind of sabotage everything. So again, the idea to automating this is the discipline, the speed, the consistency, all the things that this will remove some of the human elements, solve some of the main problems. So the reason our technology is kind of more significant is again that defined risk or defined position sizing. So if you're talking about trading futures, it's going to have a fixed number of contracts that's going to trade, right? That's how we define and kind of control our risk. Working with multiple like different strategies and different market conditions and following those daily loss limits, fixed risk per trade. All those are very controlled, repeatable things that we can offer. So what do we do? It's basically, it's not one trading bot. We actually have 6 trading bots. And this is series number 5 of 6 of us teaching the actual strategies themselves. So 5 of 6. And we have 430 plus pre-configured settings. So think of it like you have a bucket of 430 settings. You're going to reach in, grab a handful, and see how well that handful plays nice with each other. Again, how many possible combinations when you have 430? How many possible combinations can you have? It's actually trillion. It's a number bigger than trillions, but we'll just say millions, millions of possible combinations, right? And again, this is designed exclusively and specifically for funded account programs trading futures. So if you have a funded account that works with futures on NinjaTrader, specifically on NinjaTrader, our technology will work. So if you have a funded account provider that supports NinjaTrader, this technology will work. So I want to show you a quick screenshot of, and I apologize if this is a little blurry. I can show you, is that blurry? Or is that just me? Does that come through blurry? I think it comes through a little blurry. Is that blurry? Here, let's do this. Let's go look at the live version. How about that? Let's take a look at the live version where I took the screenshot from. Okay. So let's pop. This is our actual portfolio tools. And what we're looking at right now is we're looking at an analyzer. So what I do is I basically built a portfolio of individual strategies. And what you'll notice right here is the 10 EMA on the M&Q, that one that we were just looking at just a few minutes ago, that exact strategy we're just talking through. I want to show you on the funded account tab how this can work. And again, we're looking at our own portfolio tools. So check this out. This is the funded account, $50,000 account, $2,000 drawdown, $3,000 price target, and I'm running 20 accounts. How much money and what is my pass rate? Meaning, how often does it pass, right? And I'm going to start continuous, which means every Monday, right? So it shows me it passed in 23 days and it took 62 trades. It grew my account. Boom, I'm funded. Okay. Now, not only am I funded, but keep in mind, once I go to like a PA account, then I get into these performance accounts, and it shows how often it failed, how much payouts happened. Like, obviously, at some point, this ran for over a year, and it generated that one account generated $17,000, right? And at some point, as you all know, there's zero opportunity for like funded accounts don't last forever, especially with the new funded account rules where you're only limited certain number of trades. So what we're looking at is we're going back 4 years. We're going back 4 years, and you'll see even this is like recent, right? So we're going back 4 years, and we're basically determining how often would this portfolio, and you'll see here that I have 1, 2, 3, 4, 5, 6, 7, and you'll see the different tickers, MGC, MNQ. I'm using small risk on this, but the overall portfolio, you can see how well it would have grown over a 4 year period of time, right? So it would have made, and again, this is per account. So this is what it looks like on the ups, the downs, all the profitable months, all the things, right? And so again, really what this screen is telling me is how often I got funded, how often I passed. So it passed 22 times and it failed 11. That's 34 accounts. Now, obviously, this is a single, like using one account at a time. If I had 20 accounts running or 5 accounts running, you would do all of this times 5, right? You'll see my total payouts was $251,000 just running this for the last 4 years on one account. Okay. And how long does this take to trade? Well, you'll see here that to get funded anywhere from 16 to 163 days. You're like, oh, Matt, but what about the Apex 30-day rule? Well, it's going to go down a lot when you have to start inside of 30 days. Is your ability to pass is going to go down a lot. So ultimately, at the end of the day, that's why I personally like using Lucid. Lucid is a little bit more expensive, but you don't have the 30-day start all over rules that are built in. So again, this is 4 years of data, and what we're looking at here is going back 4 years. Yep. 4 years since the beginning of 2022. Now, why do we care about going back 4 years? Does anyone know why does that even matter? Why is that even significant? Well, at the end of the day, we want to take enough trades over what we would refer to as a big enough sample size. We want to be able to take enough trades over a big enough sample size so that we can make some reasonable decisions. Okay, reasonable decisions. And so what we do is we have a workshop that we're offering for any of you who are interested. It is a 30-day workshop. You get access to all of our live tools, including the bots we were just looking at, our portfolio tools, all that. It is $299 for 30 days access. It gets pretty much everything listed here. And for this group, we're going to discount that to $199. It basically works with any funded account that's compatible with NinjaTrader 8. Now, before you say, oh my gosh, $199 is too much, let me ask you, how much have you wasted or blown on funded accounts? I guarantee any of you who've been doing it more than a few months have spent more than $199, right? So I'm just framing this in the context of this is available as a tool. You can use it, you can not use it. Again, I'm not asking you to make a buying decision here on this call. I'm asking you to make a decision, an informed decision, and you can only make an informed decision on whether or not this is worth it if you kind of join our 30-day program. So we do have people getting funded in a few days. We have people that take longer. But the idea here is our technology can help remove those painful emotional decisions that we all are sometimes guilty of. So with that, again, we're just taking our first 20 people. We did have almost 100 people sign up for this webinar. So first 20 people who are interested, you can jump in and join if you're interested. I'll go ahead and put the link in our chat if you're interested. And I'll pause and see if you guys have any questions, but that's kind of what I have for you guys so far. Questions? So here is the link for our 30-day workshop if you guys are interested. Tracy, is it 2022 or 2023? 22. Okay, yeah, that's what I thought. Yep. Okay. And if you guys have any questions, this is my email address. If you want to take a screenshot of that, matt@pushbuttentrading.co. Again, matt@pushbuttentrading.co. And there's our website, pushbuttentrading.co. I went ahead and put the link if you're interested in there. And then we do webinars every couple of weeks, free webinars just like this. Hopefully, you got something out of the 10 EMA strategy. And again, you are able to join any of our webinars. We have all of our scheduling of when and what we're talking about and what the days and times are for you to sign up. So again, I'll pause here. Any questions? Anyone have questions? I see some folks are signing up now. That's awesome. Questions, 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 questions. So David, you were in our program. What do you think so far? Can I trade more than one prop firm at a time? Yeah, absolutely. Yes. So when you join our full program, we actually let you use the trade copier. It's a little bit more advanced, so we don't include that in the workshop. But you can use multiple, like myself, we have multiple different funded account programs with different funded account sizes. Yeah. How can you do that since you have one connection? So Mark, just to clarify, are you asking, can you trade like prop firm A and prop firm B at the same time? If the answer is, if that's what you're asking, you can have multiple connections. They typically use one data speed, but they can place trades in multiple accounts. Yeah. Yeah. Do I have a list of prop firms that can use the system? No, no. So we discover new prop firms all the time. Lucid and Apex and TopSep are probably the top three. Um, so those are, I mean, we discover new ones all the time. As long as it works with NinjaTrader 8, you're solid. Yep. Yep. What other questions do you guys have? How many guys would be interested in like just that software that we're looking at? Just a free trial of just how many guys would be interested in a free trial of just the planning tools we were looking at? Anyone interested in that? What is the pass rate for the system? So it depends on which portfolio. There's millions of possible combinations. The example we were just looking at was the average pass rate on your own is 27%. That's average. Okay. For basically one in four. For we can definitely raise that. We can't guarantee 100%, especially um, like when you have timed rules where you have to have within 30 days because that forces you to be more aggressive than you normally would. But the example we were just looking at was showing a 62% pass rate. Yeah. That was the example we were just looking at. Yeah. So it really, sorry, I misspoke, 64%. So this is the portfolio that I built right before joining this call. 64%. Yeah. And again, there's lots of variables and right and things that are built in here, but you can basically I'm curious how many of you guys would want to just try this tool. This does not include the trading bots, but this is like the planning tool. How many of you guys have ever looked at the strategy you're using, how well it actually works, not just your real physical live, but you can actually create your own like you can create your own portfolio. Again, there's tons and tons of options in here for so I have a couple portfolios saved here that shows my average monthly gain, my drawdown. I can build these and then look at them, and then I can go in my analyzer and say how well did it perform. like over the months. And so the way that we recommend using this is like if you can imagine your highs and your lows, these become like guardrails, right? So like what is the max drawdown? This is our maximum over our testing period, right? So going back to 2022, this is our maximum loss. So obviously if we have something that exceeds that into the future, we've kind of exceeded our guardrails. So this helps us kind of set and manage our expectations, right? And then I can look at every single trade that this is taken. You'll see here in this portfolio, 7 strategies, 3,772 trades, right? And I can look at every single one. Yeah. And this is again for automated trading. This is not a manual trading system. The strategy we talked about earlier, you can trade manually. However, we have automated every single one of our strategies. Yeah. And because of the emotions, because all the benefits that we've talked about. And I can tell you too, ladies and gentlemen, that this actually, we now have we can generate AI suggestions as well. So if you look at this, this is showing $1,266 monthly. The question is it worth you trying this out for 30 days, right? And this is showing based on what I selected a C plus, right? And so I'm able to kind of look at what are the advantages, disadvantages, all the rules, all the things that are built into this. So yeah. Let me see if I can get caught up on the questions here. Very good for journaling. Is that right? How do I do this? Can you help me? So um, this will automatically track your trades. There's a whole live tracker section that we include in the workshop. So that is part of the workshop is imagine automatic journaling. That's kind of what this does. So this is specifically for automated trading. It works with our strategies, right? Yes. Yeah. So this tool, I guess what you're talking about is the portfolio tool. We do offer a free trial of the planning tool. It does not include the bots because like we spent so much time and money trying to help people who aren't really interested. They just want to get an account passed and then just throw us to the side. So we do have a free trial of the planning tools only, just to be clear. The builder and the analyzer does not include the actual trading bots, but it does, you can kind of use it as a planner if you're interested. That is available if you're interested in the free the trial. So I'll go ahead and put that in here if you guys want to sign up for that. Yeah. So again, you can build that. That's a 14-day free trial. Again, the difference is the funded account program works with the funded account program either way, but the portfolio builder and analyzer are the planning tools. If you want to use live bots and try that, that's kind of where the workshop would come in. Yep. So yeah. Any other questions, ladies and gentlemen? Otherwise, that's what I got for you. Someone has their hand raised. I don't know if you just want to put the question in the chat, but yeah, I'll hang around for a few minutes. How does this look or compare to all the other trading systems you've seen? This is, from our experience, far superior. Yeah. So the free trial again includes just the builder and the analyzer. It does not include the automated trading. That's part of the workshop. Yep. Yep. What other questions do you have? And the reason we did that is because people will literally use our time and support to try to get an account funded who never have any intention on becoming a customer, which is fine, but we're not going to allow ourselves, use of our time and resources for that kind of situation, Yeah. Yep. What other questions? Any other questions? Otherwise, that's what I have for you guys. Is there a discount for yearly subscription? No, I don't think we've ever had someone pay a year in advance. Uh, yep. Cool. All right, ladies and gentlemen, thanks so much for hanging out with me. I appreciate your time, and we will get the recording served up here in a little bit and emailed out to everyone. Again, my name is Matt DeLong, Matt, M-A-T-T, at pushbuttentrading.co if you have any questions. Otherwise, I'll see you guys all later. Thanks. Have a great night.